Good morning, good afternoon, good evening, wherever you are. I'm your host, FD465.tv, and welcome to Monad and the Mon Token. In this weekend focus segment, where we are looking at Monad, a high-performance Ethereum-compatible Layer-1 blockchain that aims to deliver Solana-style throughput. You're talking of 10,000 TPS or more a second, sub-second finality, while maintaining fully compatible with the EVM at the bytecode level. That's what we're jumping in today. But before we look at Monad, a recently launched Layer-1 is token, recently launched, and I think mainnet also launched at the same time. Please know that what I'm going to share with you on Monad are just my own opinions. It's not financial advice of any sort. Please do your own research, and if you're from the UK, this content is not meant for UK audiences. That said, let's come back to what Monad is launch actually means for such a high-performing Layer 1. Practically, that means anyone can deploy existing Solidity contracts without rewriting them. A lot of people, a lot of projects, they've been claiming that, and I think they actually have demonstrated that it's possible. And standard Ethereum tooling such as MetaMask, Ethers.js, existing infra, all works out of the box on Monad. The mainnet and the MON token launched on the 24th of November 2025 from a large public sale and earlier VC rounds, including a 225 million Series A led by Paradigm. Let's look at some of the key features that make Monad such a hyped up Layer 1. I hope it doesn't stop at hype alone. The first key feature is its full EVM compatibility at bytecode level. Monad executes Ethereum bytecode directly, not just Solidity level compatibility. This preserves Ethereum addresses, infra, dev tools, and libraries, significantly reducing migration friction. Monad BFT consensus, or high throughput BFT. Monad is described as a hot stuff style BFT protocol optimized for low latency pipeline consensus. It targets sub-second to 2 seconds finality with linear message complexity and strong safety properties. It is designed to be tail fork resistant, helping mitigate certain MEV strategies. For example, tail forking to reorder or steal transactions. Next key feature is centering around deferred execution or consensus execution decoupling. Monad separates ordering from execution. Consensus only agrees on transaction order. Execution happens afterward. This pulls execution out of the hot path of consensus, allowing validators to fully use the entire block time for parallel execution. And next, it's parallel execution, which is based on optimistic currency for EVM. Transactions are executed in parallel where possible. Monad then merges state changes sequentially and reruns any conflicting transaction, that is the optimistic concurrence control. Architecturally similar to OCC or software transactional memory, this is the main lever for achieving 10,000 TPS while preserving deterministic EVM semantics. Next, we've got the MonadDB, which is the custom storage layer, a purpose-built key value database designed to store Ethereum's Merkle Patricia tree natively and support highly concurrent reads and writes. It is optimized for fast SSDs and asynchronous input-output or IOs, so storage is not the bottleneck for parallel execution. And finally, we've got network and validators. There are approximately 200 running validators on relatively modest hardware, talking of consumer grade, emphasizing decentralization plus performance. Let's move on to value proposition for Monad. For developers, we're talking of Solana level throughput, Ethereum level familiarity. Parallel EVM means you keep Solidity, existing tooling, and mental models, but gain high throughput and low latency. No need to rewrite code in Rust or Move like Solana, Aptos, and Sui. One can port or fork existing Ethereum apps quickly. So we are going to be having all those lightning speed migrations then from Ethereum mainnet or Ethereum layer 2s to Monad. And for users, low fees and fast user experience. Transactions feel instant and cost pennies, which is crucial for consumer DeFi gaming and social apps. For validators and infra providers, Monad offers reasonable hardware requirements with high throughput and MEV-resistant consensus designed to attract professional validators and institutional infrastructure providers. In short, Monad's pitch is the most performant EVM chain with serious backing aimed at capturing both Ethereum devs and performance-sensitive Web3 apps. So Ethereum, you're in trouble then, and your plethora of layer 2. Let's move on to some use cases for Monad. Given the architecture, Monad is naturally optimized for high-frequency DeFi and order book DEXs. Parallel execution and low latency suits central limit order book or CLOP DEXs, PEPs exchanges, and active arbitrage. Reports already highlight significant testnet TVL for protocols like PancakeSwap and expectations of high-frequency DeFi being a core use case. Next use case is going to be relating to real-time lending, structured products, and African trading style strategy. Parallel execution and near instant finality support strategies that will be too slow or expensive on the Ethereum mainnet. Gaming and on-chain worlds where low fees and high throughput enable on-chain game logic, frequent state updates, and asset transfers without crushing user experience. Social graphs, messaging, and microtransactions need consistently low fees and latency. EVM compatibility lets existing teams reuse tool chains for social and consumer apps. Several analyses envision Monad as a high throughput execution layer that can pair with modular data availability solutions, making it attractive infrastructure for new rollups as a settlement layer for layer 2s, rollups, and decentralized application layers. Let's move on to some challenges and risks for Monad. It is a new layer 1 in a crowded market. Ethereum and its layer 2s, you're talking about Arbitrum, Optimism, Base, Blast, Scroll, and many others, they already addressed scalability, leading some commentators to question whether the world needs another layer 1. Competing against Ethereum's network effects and Solana's momentum is non-trivial. Execution complexity and implementation risk around parallel EVM with deferred execution and a custom DB is complex engineering. Bugs or edge cases under extreme load are possible, especially in the first mainnet year. While testnets have run at 10,000 TPS plus with claimed stability, real-world load, adversarial conditions, and MEV bots are different beasts. Let's move on to tokenomics and supply overhang. And the figures are coming from CoinMarketCap, where the price is currently sitting at 3.7 cents at the time of recording, with a market cap of just over $402 million, fully diluted value of $3.7 billion, and a circulating supply of 10.83 billion MON tokens or coins, which is about 10.8% of maximum of 100 billion. But I also noticed that there is a figure that is not being described or being discussed anywhere. Ecosystem development. It's been unlocked from what I've come across. Approximately 38 billion MON tokens. It's not listed anywhere. There is information widely available stating that allocation has been unlocked. 38 billion or somewhere thereabouts. If I'm incorrect, guys, let me know in the comment section whether that is true. Because if that is true, this price and this circulating supply could be nothing compared to what that could do, because I know they may not dilute the market. They are not going to drop all 38 billion on, but they should at least be honest and open about it. And moving on to how the MON coin came about, I think it was part of a public sale via Coinbase Launchpad at 2.5 cents each with a 10 billion maximum supply, which implies a fully diluted value of $2.5 billion. Some analysts note that over 50% of tokens are locked for 1 year, but I just said to you, there is a 38 billion, so it could be 50% locked over 1 year, but another 50% is actually in the market, not the 10% that is reported. That's my own view anyway. And the implications of that is IFDV means substantial future unlocks is yet to come, even though this hidden 38 billion could actually cause some price impact on the market. Concentration among early VCs, you're talking Paradigm, Coinbase Ventures, and others, is both a signal of confidence and a centralization risk. So Monad currently is centralized, massively centralized compared to some of its rivals. As for adoption and ecosystem risk, it is a fast chain without sticky apps or strong community which can stagnate. Monad still has to prove sustained TVL and flagship apps beyond launch high. As for regulatory and market cycle risk, as with any large cap new layer 1, regulatory classification, exchange policies, and macro crypto cycles, talking about Bitcoin halving and race and so forth, will heavily influence MON's performance independent of tech. We've already started seeing that because the market makers behind the MON coin tried to push it up artificially, but it's coming down because it is lacking that sticky community. Because at the moment, those tokenomics and that maximum supply, it's ridiculous. And we move on to the competitive landscape where you got Ethereum and this plethora of layer 2s is waiting for Monad. Ethereum remains the liquidity and mindshare king, with layer 2s progressively increasing throughput and fees. If layer 2s fully solve user experience for most users, Monad needs more than just fast EVMs to stand out. Likely superior user experience for high-frequency apps and better MEV handling. I think because if I'm going to be using Monad and I don't need to hold Ethereum as a token to trade on Monad, I'll go with that. Because at the moment, even using layer 2s is a nightmare. I was trying to transfer some Manta Pacific tokens from my self-custody wallet onto an exchange. Yeah, I had to make some move to bring Ethereum at cost just to take them back and get rid of. So that says a lot about some of these layer 1s and the model that Ethereum uses. If the conversion could happen behind the scenes, that would help a lot. But holding another token, which is why I'm hoping the model that a new project on Cardano called Midnight is bringing in, it might actually be adopted by more projects going forward, where the transaction fee is generated passively just by holding the main token. That should be the way to go, so that you should not even bother with that. Okay, let's move move on to Solana, another competitor for Monad. Solana offers very high throughput with a custom runtime in languages such as Rust and C, but is not EVM compatible. Monad positions itself as Solana level performance for Ethereum devs with parallel EVM instead of a new virtual machine. And the likes of Sui, Aptos, Sei, and other high performance layer 1s, these chains also offer parallel execution and a high TPS but lack full EVM bytecode compatibility. Monad's differentiator is blending parallelization and deep EVM compatibility. Other parallel EVM projects such as MEV-aware, Supra, and many more could be competitors for Monad. The parallel EVM niche is getting crowded. MEV-aware, Supra, N1 chain, and others explore different architectures, macro virtual machines, modular designs like your Sei and Celestia. Monad's edge could be years of targeted R&D and serious funding and a full stack approach, consensus and execution and database rather than a thin layer. Overall, Monad is differentiated more by execution model and EVM fidelity than just TPS numbers. Price predictions and projections for Monad are characterized by high uncertainty, and this is not financial advice. First, the current snapshot, the coin market cap at the time of recording, the Mon coin is sitting at 3.7 cents. I think it's slightly coming down as well, and with a market cap of just over $402 million and fully diluted of just over 3.7 billion, circulating, which I'm questioning, at 10.83 billion Mon coins. All-time low was achieved at just over 2 cents a few days back from the time of recording, and all-time high almost 5 cents just recently. Some third-party analysis frame things like a price of around 25 cents per Mon token once fully unlocked, and that's more of a scenario than a guarantee. Pre-market and early trading implied valuations of 2.5 billion fully diluted up to 14 billion, and in some derivatives markets they were showing sentiment to be highly volatile. Given this, there is a purely illustrative scenario framework, not a prediction, and absolutely not investment advice. First year, rough scenario by the end of the 2026, which will be its first full year. You're talking of bear and disappointment scenario here, because I think we'll be entering a bear market. Ecosystem growth underwhelms, TVL remains low, unlocks outpace demand, and fully diluted value compresses to say 1.2 billion well below current, with approximately 15 to 20% supply circulating. I think it will be close to 50%. That implies a wide range, but you could be looking at 1 to 2 cents per Mon token or lower. I think if it goes lower than a cent, I'll probably go in, and I'm waiting to go into Monad during the bear market. And looking at the base case scenario for mid-tier, Monad secures several flagship DeFi and gaming apps, TVL and fees, place it among mid-caps, and unlocks are digested, fully diluted value of approximately 4 billion. They are probably on the cards. If supply is not anywhere near the 50% I'm expecting and is between 20 and 30%, then this maps to roughly 5 cents to 15 cents per Mon coin. That is too low compared to the high, but then the maximum supply is extremely high. The bullish scenario or outlier scenario is where Monad becomes a go-to chain for high-frequency DeFi with strong fees, TVL, and narrative comparable to leading out layer 1s today. Fully diluted value of approximately 10 billion with 20 to 35% circulating if we know the ecosystem development fund of 38 billion that no one is talking about. Then we may be seeing 20 to 40 cents per Mon coin. And a 3-year review could put Monad where I have no idea, but key drivers to watch for such a period will be TVL and fees on Monad versus its peers, daily active addresses and transactions that aren't just airdrop farming, distribution of valid data set and state, unlock schedule versus market liquidity, and developer activity, which also includes number and quality of native dApps. So philosophically, a Monad is a simple, indivisible unit. Leibniz's fundamental substance in the Haskell's favorite design pattern. Monad, the blockchain, is almost the opposite. A highly engineered composite of consensus tricks, concurrency theory, and bespoke databases, all wrapped in the familiar clothes of the EVM. If Ethereum is the canonical category, Monad is trying to be the endofunctor that preserves structure but compresses time. Same object, contracts, addresses, tools, dramatically different morphisms. You're talking of parallel execution, deferred state, MEV-aware consensus. Whether Mon ultimately becomes a blue chip asset or another speculative note will hinge less on its TPS flex and more on a very old question in computer science and philosophy alike. Can a beautifully designed abstraction survive contact with messy adversarial reality? That is the question we are all waiting to be answered for Monad. I currently do not have a position in Monad. I hesitated when it dropped after launch to about 2 cents or somewhere thereabouts. Then it shot up to almost 5 cents. Now, like I said, I'll be waiting to get into Monad during the upcoming bear market. What I want to know from you is, did you get the Monad airdrop? Let us know in the comment section. Did you sell? Did you make money from it? Or you're holding because you think Monad is the next next best thing after sliced bread? Let us know in the comment section, guys. Until the next one, FD for SigFab.tv signing out for now. Bye.